If I own a business and I have a life insurance policy on one of my employees, but they leave the company, how does the insurance company know when that employee dies? Especially if I no longer have a relationship with them. Today, we'll answer that question. So let's pretend that this is you and you've got your business, you've got an employee, and you decide to take out a whole life insurance policy on them. A lot of companies use this as a deferred compensation plan. The cash value builds up. It's an asset on the balance sheet, and the life insurance also serves as key man coverage. So we'll just say, for the sake of simplicity, that the life insurance benefit is $1 million that you take out on this employee. So the employee is what is called the insured. When they die, that life insurance benefit is paid out. The beneficiary, in most cases, is the company, since the company owns the plan and they're paying the premium. So your business is due to receive that $1 million benefit if and when that employee dies. That's if they're still working, if they quit and you keep that policy on them, or if they retire and you keep the policy active the whole time. Whoever the beneficiary is will receive a payout if the life insurance policy is still active. Now, the cash value is an asset on the company's balance sheet, and they can use the cash value for whatever they want. But back to the question, if that employee says, hey, I don't want to work with you anymore, I quit, or maybe they don't say that, they stay with you and then they retire, but you no longer have contact with them. How do you know when they eventually kick the bucket? Because that's when the life insurance benefit eventually is going to flow back to the company. And that was a big reason why you took this policy out from the get-go. So there are two things that will protect you in this case. The first, all insurance companies do what is called an internal search. And they do this with the individual's social security number. So we actually had a case of this happening recently where someone passed and the life insurance company let us know before the family even reached out to us, because they did an internal search and they saw by searching his social security number that he had died, and they said, hey, guys, we wanted to let you know that we saw this person, they recently passed. We would like you to reach out to the family, if they have not reached out to you already, to begin the claim process, to file a death benefit claim. So that is comforting when a lot of people hear that, knowing that insurance companies do proactively search for people that have passed, because their first and foremost obligation is to pay out the life insurance benefit. So that's the first way. The second way is what you can do if this is a company-owned plan, is what is called a split dollar benefit. Now, this is not a split dollar plan that you'll see rich people do with using a business and a trust. This is literally splitting the death benefit between the employee's family and also the business. And this is typically executed at the beginning of the policy when everything is started. So for example, from day one, you might say, hey, employee, you make $100,000 per year. With this life insurance policy that we're taking out on you, the business is going to benefit from it. We'll have cash value. We get the life insurance benefit if you die. However, we are going to give you some protection here where you will get a 1x multiple of salary, or we should say your family will, if you pass. So what that means, of that $1 million death benefit, his family gets $100,000, and then the business gets the remaining $900,000. So where this provides some additional protection is if you're this employee's family member and he passes, are you going to reach out to the insurance company and or the business to file that claim because you're going to get that money now? Of course. You literally have an incentive to do this as well. Now, with those split dollar plans, those are optional. Not all companies exercise them. However, this is something that you can do as a business owner for employees that you allow to participate in these plans. But those are the two ways that a company would be protected in this particular case to ensure that the life insurance benefit does come back to the company, which is a valid concern because the company is the one who's been paying the premium the whole time. So I hope you enjoyed this video, and as always, I hope this helps.